Welcome back to Midcap Radar. The central government announced a long-awaited revision of CGHS rates, updating the prices for nearly 2,000 medical procedures. This will be the first major overhaul in over a decade. To discuss on this, we are now joined by Kunal Dhamesha, Pharma and Healthcare Research Analyst at Macquarie Capital. Thank you so much, Kunal, for joining us. Well, first up, we want your take on this particular development. It's been a very long time that the industry has been asking for it. How does this impact the financials of hospitals? And if you could break it down tier-wise for us.
Sure. So basically, CGHS rates do get some form of inflation adjustment every year, but then it's like a pay commission that there is a major revision that happens after few years, right? And this major revision has happened, as you suggested, after over a decade. And if I look at the some of the high ticket procedures in key therapies such as cardiology, orthopedic, neurology, oncology, I see the rates have been hiked by anywhere between 5 to 30% over the 2024 rates. So it is definitely a major revision. And when I look at some of the hospital companies, uh, not all companies report the CGHS revenue separately, but most of them report something called government channel revenues. And government channel revenues, in based on the company reports, is one of the highest for Fortis at around 20% plus, followed by around 19% for Max Healthcare, similar number for Narayana Healthcare, and roughly around 10% for Medanta and 10% for Apollo Hospitals. Now, within this government channel revenue, there are multiple channels again. One of that is CGHS, another one is ECHS, and then there are PSUs and some of the state government schemes, etc., kind of feature into that. Now, only Fortis provide a lot of clarity onto CGHS, and they derived roughly 4.5% of their revenue from CGHS in FY25. Which basically means roughly 25% of the government channel revenue is coming from the CGHS.
Kunal, you said only Fortis has provided some clarity. So what kind of numbers have you factored in terms of an increase that we'll see on the bottom line because of this increase that would come by? And with CGHS, CGHS itself, which would the biggest beneficiary be apart from Fortis?
Sure. So I think, almost all the companies will have some exposure to CGHS. Specifically, the exposure would be higher for hospitals which have a significant presence in Delhi-NCR region, because that's where maximum of the central government employees are situated, right? So that is one. In terms of, there is a second order impact as well, because the other government channel also, some of them refer CGHS as a reference rate. So basically, let's say the ECHS, which is for the servicemen, right? That kind of refers to CGHS rate. So that is another channel which again will kind of get the rebates in terms of tariff rates. Now, in terms of the impact, I have not analyzed the exact impact or exact increase in the entire 2,000 procedures where the rates have been revised. But as I said, the key procedure, my view is that the average rate hikes is around high teens percentage point. And if I assume that half of these government channel revenue for these hospital gets rebased by that high teens percentage point, then we are looking at somewhere around and this is a pricing revision, so it should ideally should fall directly onto the EBITDA. And hence, we can see EBITDA upgrades of anywhere between mid-single digit to low double digit is what my base case scenario would be.
Okay, Kunal, I want to ask your views on two individual companies. First up, especially as far as Max Healthcare is concerned, there are a couple of news reports indicating that cashless payment facilities by various insurers were under a cloud, and in fact, the company had said that they would look to stop it. That was the first one. And secondly, over the weekend, as far as Fortis is concerned, SEBI has given the nod for the open offer from IHH. How significant are both of these developments?
So I would start with the later one on Fortis.
Sure.
The clearance of the open offer from IHH definitely removes a long-standing overhang on the stock. This has been under judicial matter for quite some time, and this kind of clears the air for the company. However, at this point, it is not exactly clear that whether the IHH will follow up with a new open offer or would it be the same, because the earlier open offer at that point in time, which was blocked, which was somewhere around 170 rupees per share or something. So we need to see more clarity to emerge from IHH on that aspect, but definitely a removal of regulatory overhang on the company. And for Max Healthcare, yes, various media reports are suggesting that the four health insurance companies have kind of suspended their cashless facilities. Some at the pan-India level, some at the Delhi-NCR hospitals of the Max Healthcare. So to that extent, I think there could be some impact. Max Healthcare derives 40% of its revenue from the insurance channel. And these four companies, the four insurance companies which have kind of suspended the cashless facilities, they accounted for almost 30% of the health insurance premium in the retail channel. So, that there could be some impact is what my expectation is. Very difficult to quantify, given we don't know the exact market share state-wise for these insurance companies, and also the procedure mix, etc. But I've been highlighting this, in my analysis, that the ARPOB growth of the industry, hospital industry, has been at around 11%,
Right.
starting from FY19 to 24.
Okay.
And this is obviously above the historical range.
Got it.
Primarily, it is driven by tariff hikes, and this is what
All
is
right.
causing these
Okay.
issues.
Okay, Kunal, thank you so much for joining us. Out of time now, but that was quite helpful. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets, and Hormuz will come back, focus on power struggle and boardroom battle at Tata Sons. Stay tuned for that.